Hello and welcome, everybody, to the new year. Welcome to 2024. Welcome to the Hot Corner Insider Strategy Session. I'm your host today, as always, Steve Strazza. I'm the Director of Research at All Star Charts. We're here every week, every Wednesday at 1 o'clock. We talk about a little bit of macro, a little bit of top down, the developments of the past week. Then we jump in to our favorite names from our insider trading universe. We got a good little intro section today, some important charts. First, nothing we discuss here today constitutes any solicitation to buy or sell any securities. This is all solely for informational purposes, not to be construed as investment advice. For more details on our disclaimer, head to allstarcharts.com/terms. What's up, Wavy? What's up, Abraham? Hey, Chris. Thanks, everybody. We almost started on time today. Better than the last couple of weeks, at least. I snapped you out of the short hole. That makes me feel so good inside. That makes me so happy to hear. Listen, bull markets are more fun. Being bullish is more fun. Especially if I have I guess, generally positive disposition about life. I try to be a happy guy. I think I'm a pretty happy guy. It's just easier for me to be bullish. I have to be careful of that because there is a bias there, but it just works more for my personality. Everything's better. People are happier. People are having fun. What's up, Nick? So how do we end the year? In record fashion. 9 consecutive up weeks for the S&P 500. Hopefully this chart is clear. I drew the little gray line here over the past, 4 decades. It's showing you that 9 is about as good as it gets. 9 straight weeks of gains at the index level for the S&P 500. Saw it in the early 2000s. We saw it in the late 80s. This streak, and it is ending, looks like it's pretty clearly ending this week. But this streak, you got to go all the way back to 1985 to find a bigger win streak. 38 years, right? So I guess the point I'm trying to make is you can't undo that now, right? You can't undo all that progress off the October lows. We're going to correct. Pretty rough throwback for just about all stocks over the past couple of trading days now. To be expected. I think it's fair. Last week, go back and watch. We talked about at the top of the call how when we get some of these extreme breadth readings, like we had on our S&P 500 stocks overbought indicator, right? I think the biggest reading ever. And we went back and we did that little study. Hey, last time in June of 2020, what happened right after it? S&P was down almost 6% in a single day. So longer time frames, these bullish breadth thrusts, as good as it gets, right? Tells you a new bull market is underway. Over short time frames, particularly ultra short time frames, tells you we're probably due for a pullback. You don't always get them, but you want to be ready for them. And we're seeing it now, right? So 9 straight up weeks for the S&P 500. What a way to end the year. Now, we talked about whipsaw hunting season. We talked about how a lot of these trends that get extended in December are reversed in January. Seeing it to a T. In fact, it started a day early. The selling really began last Friday, right, on the 29th. And you're seeing some bearish follow through these last 2 sessions. I don't love the tape, obviously, these past 2 days, but I'm also not going to overthink it. I think that there will be some real gifts through this corrective wave. I think a lot of base breakouts will be retested from above, right? And you can look for that former resistance, the base breakout levels, to become support and should offer some excellent entries. I got involved in one such setup like that today. Built a little starter position in Carlyle Group, this CG. If you want to go pull it up on your own, you'll see what I'm talking about. with a really clear breakout level, a nice breakout, a little throwback. This is a group I'm interested in. It's been on my list, right? And now I have an opportunity to get in what to me looks like a very logical level. I know that I can manage my risk responsibly and at least against the shelf of former highs. Now, we do know that dips are to be bought. It's a bull market. We know a dip is coming. It's already playing out. When does the correction end? How do we know the correction's over? Let's draw some lines in the sand. Last week, we focused a lot on the intermarket, right? I gave you guys levels for the 10-year and for the dollar, 4% and 102.50, right? We talked about how these intermarket tailwinds, which used to be headwinds, really had everything to do with the gains enjoyed by risk assets in 2023. So we're watching those very closely. Let's focus a little bit less on intermarket today. Just look at some of these stock charts, and then we're going to look at risk appetite ratios. So I guess that is intermarket. NASDAQ 100. Here are your leaders. 400 are those former highs, the prior cycle highs. You want this breakout to be a valid one. You don't want this chart reversing and the leaders falling back below this key overhead supply zone. 400. Keep it clean. NASDAQ 100. We're probably, let's just throw this up quick. I think we're dipping below today. And what that does is it allows 400 to be a level that we see reclaimed on strength. And I like that because I don't think that you want to necessarily be running out in the middle of the corrective action. I think you want to wait for some sort of a tradable low to emerge, right? And then buy momentum out of the corrective action. So not what I did in buying Carlyle Group today. That one was just so clean. I've been dying to get into it. Took my shot, right? But the better way to probably do this, let the selling stop, wait for some upside momentum to come back into these groups, and then start getting long on strength, right? So NASDAQ 100, 399 and change right now. Now what that tells us, we get to see strength, momentum come back in here on some sort of a reclaim of these old highs. When that happens, corrective wave is probably past. Russell 2000. This is IWM. It's the ETF. 200. So clean. We talked about it. If we're above 200, the primary trend has reversed. It's now higher. The path of least resistance is now up. New bull market, new uptrend above 200. Back below 200, this starts to look like a pretty nasty failed breakout and something that's still a range-bound mess. Wouldn't that frustrate market participants so much? We've been staring at this chart of the Russell 2000. It's been trading in this 40-point range. It's like watching paint dry since early 2022. We're in 2024 now. Everybody just thought we got the breakout. What a run for small cap stocks off the October lows. Outperforming large caps for the first time in a long time. The market is designed to fool most of the people most of the time. Wouldn't it just catch a lot of investors off guard? Just as everybody's talking about small caps, everybody's getting pumped up about small caps, for this to fall back into the range and just be another big mess, just like it was last year and most of the year before. More basing. I don't know. I think we need to remain open to it. I think another one that has to be at the top of any correction checklist is ARK. I want to know that the animal spirits are alive and well. I want to know that investors are favoring the most offensive or the most risk-on stocks and groups. I don't think any index does a better job of that or does a better job of illustrating those risk-on forces than ARK. That's why I talk about it so much. And look how clean it is. 5150 got up there, looked like the Russell 2000, looked like, ooh, the reversal's in. Textbook rounding bottom. We're headed higher. Oops, nope, falling back into the box. When this correction is all said and done and over, I know ARK is breaking back out of this base. And we're once again coming here, showing this chart and saying, what a nice trend reversal for ARK and Russell 2000. And why don't we just throw the IPO index in for fun? It's the same thing as ARK. Super clean level here around 36, right? It's really the summer highs from this summer. and last summer. How clean. Many would like to call this a inverse head and shoulders. That's just a fancy name for a reversal pattern. And again, we fall back into this old range here. The reversal is no longer in. It has failed for now, or probably end up calling something like this, circled in red here, a false start in a couple days or a couple weeks, or God forbid, it could take a couple of months. I don't know. But these are the things that I'm expecting to be in place and the levels I'm expecting to be reclaimed when the correction's over. Risk appetite. In bull markets, investors play offense. So naturally, staple stocks underperform. What we're doing here is this is the staples versus S&P 500 ratio, but we flipped it, right? Because I want it to look like stocks. I want it to look like the S&P 500 in absolute terms shown up top here, right? And it really does, right? So this is SPY up top, and this is SPY relative to XLP, stocks versus staples. So when this line is going up, it's telling you that staples are underperforming. Staples underperforming, a hallmark characteristic of bull markets. So staples falling back below, or staples relative inverse falling back below the prior cycle highs, just as the S&P 500 is meeting resistance at the prior cycle highs. I'll pull up the chart here. SPY XLP down again today. So, we've been seeing staples outperform since really all of last week, since really Friday, December 22nd. Pretty consistent outperformance from staples. SPY XLP now back below this level right here, 650. 650. When the correction is over and risk assets are ready to experience a new leg higher, SPY XLP is going to be breaking back out above this 650 level, right? And the S&P 500 is going to be taking out these prior cycle highs with it. This is an interesting one. So now this is dollar, and it's the same ratio, but not inverted. So this is XLP SPY now. Notice how it tends to move with the dollar. We overlay the dollar with stocks a lot. We overlay stocks with SPY XLP. You could overlay the dollar now with XLP SPY. Right? You see the top here in each of them, back at these key levels, right? We want to see staples continue to underperform, probably happening in an environment where the dollar is continuing to move lower and taking out its range lows. These things all happen together. Weaker dollar, finally a breakout for the S&P 500. And the NASDAQ here, right? Probably is happening when the dollar's falling. Also probably happening in an environment where staples continue to underperform. This is a really good one. Maybe my favorite right now. High beta, low volatility. Big base here also looks a lot like the S&P 500, right? So this is SPHB, S&P high beta, versus S&P low volatility, SPLV. Same thing as S&P 500 versus staples, SPY XLP, right? You could see it ran right up into this supply zone, just as stocks were making their prior cycle highs. A lot of basing, right? Big consolidation phase. I guess a bear market in 2022 for stocks. And now we're right back at that level. Got the breakout late last month, and now reversing lower back below those old highs. In a world where the correction is passing and stocks are breaking back out to new highs, SPHB is breaking back out relative to SPLV. The level here for this one, really clean, 130. I guess really 129, right? This is 129 right here. That level gets reclaimed. High beta stocks continue to show that relative strength. One more. Credit spreads. These are credit spreads upside down. It's high yield bonds versus treasury bonds. We got the breakout, right? Consistent with the breakout in stocks or new highs in stocks. Really nice breakout here. Now we're falling back into this box, right? Just like the Russell 2000, just like so many other things. ARK, IPO index, back into the box. If and when, well, when, we know it's going to happen, when this corrective phase is over, HYG IAI is breaking back out to new highs. Credit spreads are again making new lows, right? Those are some things. We have a longer checklist than that we're putting together internally. But again, a lot of these things will happen together. That's why we make a list of them, right? They might not all happen, but if we have a list of 10 things that we expect to occur, when the corrective phase is passed, and we can start checking the box on 6, 7, 8 of them, we know we're there, right? So that's why we make a nice list and don't just look at one chart. These are the things that we would expect to happen. Now, this year, we're here. Again, just, everybody's back to work, and a lot of these trends that got overextended in December, reversing pretty hard here today. ARK on a 3-day rate of change basis, worst 3-day streak in over a year. One that stands out the most, though, and we talked about this a few weeks ago, I showed you guys a ratio chart of the Magnificent Seven versus the broader market. I said something like the Magnificent Seven just had its worst day of the year, or something like that. It was. I think it wasn't even of the year, just the past few months. And we said we expect more of this in the future. Well, yesterday, tech was down big. This is the large cap technology sector spider XLK versus S&P 500. Worst day since January of 2021. 3 years. I know it's only one day. Tend to see volatility spike, short-term volatility spike in both directions at turning points. I think the relative trend that has favored leadership for mega cap growth stocks, I think, is gradually coming to an end here. I don't think it's a bad thing either. This is equal weight technology versus equal weight S&P 500, because I know some of you are thinking XLK SPY, worst day in 3 years. Well, it's because of Apple. Apple had a terrible day yesterday. So let's remove that cap weight impact of Apple and XLK, and let's look at the equal weight technology index versus equal weight S&P 500. Now you'd have to go all the way back to 2020 for a worse single session for this ratio. So technology, large cap technology, not just the mega caps, not just the biggest ones, not just the Magnificent Seven, but all of large cap technology. Worst day on relative terms in over 3 years. I think that, despite it being one day of price action, it's just a really, really interesting little case study of what's going on over longer time frames. And we've been seeing it kind of play out really since November, December. These mega caps kind of giving back while the rest of the market looks very strong. So I would expect more of that. Let's continue to keep that in mind. Now we have just small handful of stocks. Again, like I said, call me crazy for buying Carlyle today, but I don't think you really need to be running out buying stuff hand over fist right here, right now today. Our slide deck, I guess, kind of supports that because we only have a handful of ideas here today. You probably want to give this thing another week. Again, let the dust settle, then look back to some of those strongest names, some of those biggest winners off of the October lows. I think that's probably the right playbook. No need to really jump into this when we see no evidence that the selling pressure is kind of easing yet, right? So a couple that stand out. I was just talking to Fonz internally. I'm following Baker Bros into their next big one. I don't know if this is it. They own 9.9%. This is Immunocore, IMCR, but I think we talked about it on here. I think we did the little case study a few weeks ago of just how much money Baker Bros made on their Seattle Genetics investment. Something like $9 billion. Sure, they were in it for 10 years more. $9 billion in a single trade. And now all of all of those shares are going to be converted to cash because the stock has been acquired. The company's been acquired. So they're going to have $9 billion in dry powder. Where's that money going? We are watching very closely. This is a candidate. IMCR. They already own just under 10%. This is an older one. They've had the position since, I guess, July of 2022. So already doing doing pretty well on it. We're above 62 long all day. This stock is making new all-time highs right now. Not many stocks are. Biotechs were up yesterday. Biotechs looked great yesterday. All of healthcare looked great yesterday, while most of the market was lower. We're going to be talking a lot more about biotechs this year. A lot more about banks. A lot more about materials. A lot more about small cap tech stocks. And a lot less about all of our favorite names. The biggest and the best stocks. It's more fun for me, too. More charts to look at, right? More ideas. More ponds to fish in. IMCR. Ideally, you want to buy this one as close to 62 as you can, but kind of already leaving the station on us. You have this really clear level, this shelf of highs. You know, we're using the post-IPO high right here, around 62. If you want to keep it a little bit tighter, maybe use like 67, 67 and a quarter. Get you to the intraday highs on a year-to-date basis, all the way back to really November of last year, right? We got 3 touches here, 1, 2, 3. So I think you could use, 67, right about 72 today. Point is, this one I think should be on everybody's list. This is a name that I'm very interested in and will be long very soon. Brady Corporation, BRC. Russell Shaller, Form 4 filer, about $500,000. Look at the breakout here. Multi-year consolidation pattern breakout. 59 is that level. If we're above there, long all day, target 75. When the market's selling off like this, particularly in the context of a primary uptrend, like we're in, right? Like we're confident and comfortable that this is a new bull market, then we get this corrective wave. Paying attention to relative strength and leadership through these, volatile periods within bull markets is the cheat code. The ones that hold up the best through the selling pressure tend to experience, the most aggressive legs higher once that selling pressure subsides for the broader market. So you want to pay attention. Which ones are really working in a tape where most stocks aren't working? Those are the ones you want to pay most attention to. Those are the vehicles, right? For any new up leg or rally phase that we get. BRC really stands out, Brady Corporation, because it broke out yesterday. Most things weren't doing well. It's trading pretty well here today. Down 0.3%, really nothing, really unchanged on the day. So the relative strength over the super near term really stands out in this one. Lab Corporation of America, LH. They do the blood tests and stuff, like Quest Diagnostics. Form 4 filer, a while ago now, but this is why we keep them on our list. I would not have wanted to be buying this when this Form 4 filer was. February of 2022, so like right here. What do? We put it on our list. We wait. We look back almost 2 years later. Well, look at this. We got a nice trend reversal on our hands now. Okay. 225 is that level. It's a clean one. Trade it back up to 270, 250. Don't love it, but this is the right chart. This is the chart that we've been buying all of last year and have continued to be rewarded for. Healthcare is a place where, we're seeing relative strength. We're seeing flows. We know that the positioning is very offsides. Sentiment is really good. People don't like these stocks. So this one, checks a lot of boxes for us. LH above 225, target 272. One more, US Foods Holding Corp, USFD. We're above 42. Another, 5-year consolidation pattern breakout. Robert Dutkowski, $1 million in the Form 4. Yeah, above 42.83. I think you get confirmation at, let's pull up this chart. You're going to get confirmation at these highs right here from late last year, 44.50. I think you could even move that risk level up because the stock's trading around 46 today. I think you could use 44.50 as the risk level. Maybe 42.80, last line of support. And again, Same thing as Brady Corporation, breaking out in a tough tape. The stock has been up the last 2 days. Look at what tech stocks or ARK or small caps have done in the last 2 days. So to get the breakout done in that tape really stands out. I like the relative strength. We're above 42.80, or like I said, 44.50. First target 64 in the US Foods Holding Corp. Guys, that's it. I'm going to flip over to the YouTube real quick and see what I missed. But I think, like I said at the top of the call, we intentionally kept this one short today, at least in terms of trading ideas. If anything, maybe go back and re-listen to the intro, make yourself a little list of these charts and these levels. And that's your answer. You don't need to ask me, oh, when should we be buying this dip? When do we know that this correction's over? All the things I described at the top of this call should be happening, or the majority of them, right? You weigh the evidence. So I think that's really the playbook for right now. It's new bull market, green light. Corrective phase, red light, right? So let's be patient. Let's continue to assess the new data as it comes in, and we'll know when the time is right to start getting aggressive again. But I think that nice run off the October lows, while there was really important progress, right? some structural progress that was made there, it's good, but I think that phase is pretty much over now. We've seen a stark change in character, right? That short-term momentum that had fueled the rally off the October lows is gone now. So now how long does this corrective wave last? I don't know, but that's where we are, right? We're monitoring it. We'll know when it's over. Rotation with breath. Hell yeah. Big Dixie rebound. Of course, right? Talk about dollar, 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 dollar. Stocks are correcting in a big way. Look at yields in the dollar, right? IWM. Very frustrating, Ryan. FOMC minutes out in 40. Great. God, yeah, it's weird, right? Short week. It's Wednesday. Huh. Yeah. Oh, I was supposed to do one of those Twitter spaces, and then I found out they were doing like a live Fed talk thing. I said you could cross me off that list. It's just it's a whole thing, and everybody on there, nobody really knows what they're talking about or what it means. We haven't even got to see the reaction yet, right? A lot of times the FOMC stuff comes out, you get a move in one direction, and then either it reverses hard into the close, or even the next day it reverses hard. Like just the reaction, those 2 hours that are left in the trading day, it's not enough. You really need wait till the next day. So to get on, start talking all about FOMC this, FOMC that. No. I know this is just the minutes. It's not even an announcement, so even less important. IBKR. I love it, Javi. This one has a special place in my heart. I like it when Interactive Brokers is doing well. I really like the price action of the last 2 days. If you zoom out on the IBKR, you want to look back about 5 years. We started to go, and just give me a second here. My computer is moving real slow on me. So we started to go. It looked like we were resolving this, big consolidation in Interactive. I have my horizontal breakout line drawn at about 80, right? So if you think about it that way, so 80 is what is it? 2018, 2021, early 2022 highs. We really hooked lower. And if you look at that weekly candle, the late November weekly candle, big spindle lower, right? Big lower shadow or lower wick, and then reversed higher nicely. Go drop an anchored VWAP from the all-time highs from September of last year, reclaiming it here with authority this week. And again, I'll say the same thing about this Interactive Brokers as I did about Brady Corporation and US Foods, breaking out, having 2 really good days and a not so great tape for most stocks. So definitely stands out. IBKR all day above 80. I like it. I think financials are going to be the place to be this year. Cal-Maine. Sure. I don't think they're a hot corner name though, Josh. Yeah. So Javi, mixing fundamentals, I do. I work for a technical research shop, so I tend to say less about fundamentals than I think about fundamentals, but they are being incorporated for sure. And if you hang out and you start listening to me more, you'll see what I mean. I do. I put the fundamental cap on pretty often, I think. You know, when you go back to some of the better trades I made late 2022, early 2023, a lot of these charts still really didn't look good, right? So I was really leaning on fundamentals and understanding, okay, I'm really trying to catch an ugly downtrend or a falling knife here, right? So a lot of that came back to fundamentals. It wasn't until quarters later, charts started to really shape up and you had some clear reversals there. But something like Coinbase, you go back to what we wrote about Coinbase in November of 2022, stock was in the 40s at the time. The post was about as fundamental as we get. I think it was called Making Coin on Coinbase. Google it. But yeah, I love fundamentals. That was my early career. My background is in fundamentals. I was a CPA, a Big Four auditor. Thought I was a value investor for a little while there too. Scaling back on tech, short term. I think so. Yeah, I think profit taking in tech is the prudent thing to do, especially the best tech names that really ran. Some of them just got downright expensive too. I had that big Apple downgrade out yesterday. I read through it. I agree with everything. It's really for me, it's simple. It's you don't even have to talk about the business. It's just a valuation call. Apple with like a 20 or sub 20 price to earnings multiple all day. Love it. Now we're in the 30s. Not so much. But look at Google, Meta. They're cheaper. Some of those speakers on the spaces are fun. Yeah. Yeah. Done. Yeah. Be careful with a lot of these guys on the spaces. The ones who talk about all their trades and how much money they're making, run from those people. LBRT. I'm not familiar with it. Thanks, Nick. I'll look into it. Yeah, Javi, you make a good point, and we do try to do that, but we will also a lot of times the fundamentals just don't tell the story, right? If you're looking at like a biotech or a non-profitable tech company, you can look at the fundamentals, but they're really story stocks, right? And their stock price will go up on the prospect of things happening that can't be quantified and are not on the balance sheet, and they're definitely not on the income statement because they ain't making any money, right? And these stocks will move, and the only thing you really have there to help you is price. So technicals over fundamentals all day and in a big way. They work a lot better. But to be mindful and to make sure that, maybe you're fishing in a pond of quality names or quality stocks, I love doing that. So we could do some really basic scans just to make sure that, there's a certain level of quality. And then we drill in using 100% technicals. But the way that we got to the universe was based on fundamentals. That's typically, I think, the sweet spot. I don't think you want to overthink fundamentals. Guys, this has been fun. Happy New Year, everybody. 2024, I think it's going to be a great year. Thank you all for continuing to support us. Come watching these videos. Participating in the chat really makes this a lot of fun. So that is it for today. Join us on the morning show every morning, 8:30 to 10, right here on Stock Market TV. And be sure to join us back here next week, same time, same place. All right, everybody. Thanks.